Are you thinking about buying a home? Don't do this. So while it's exciting to start thinking about moving in and decorating after you've applied for your mortgage, there are some key things you're going to want to keep in mind before you get to close and get the keys. Here's a list of things that you may not realize, but you really need to avoid after applying for your home loan. 1. Don't deposit large sums of cash. Lenders need to source your money, and cash isn't really easily traceable. Before you deposit any amount of cash into your accounts, discuss the proper way to document that transaction with your loan officer. Number 2, don't make any large purchases. It's not just home-related purchases that could disqualify you from your loan. Any large purchase can be a red flag for lenders. People with new debt have higher debt-to-income ratios and how much debt you have compared to your monthly income. Since higher ratios make for riskier loans, borrowers may no longer qualify you for the mortgage. Resist the temptation to make any large purchases, even for furniture or appliances. Number 3, please do not co-sign any loans for anyone. When you co-sign for a loan, you're making yourself accountable for that loan's success in repayment. With that obligation comes higher debt-to-income ratios as well. Even if you're promised you won't be the ones making the payments, your lender will have to count that payment against you. Don't switch bank accounts. Lenders need to source and track all of your assets. That task is a lot easier when there's consistency among your accounts. Before you transfer any money, make sure you're speaking with your loan officer. Please don't apply for any new credit. It doesn't matter if it's a new credit card or a new car. When you have your credit report run by organizations in the multiple financial channels, i.e. mortgage, credit card, auto, etc., it will have an impact on your FICO score. Lower credit scores can determine your interest rates and possibly even your eligibility for approval. Don't close any accounts. Many buyers believe that having less available credit makes them less risky and more likely to be approved. That just isn't true. A major component of your score is the length and depth of your credit history, as opposed to just your payment history. The total usage of credit as a percentage of available credit. Closing accounts has a negative impact on both of these aspects of your score. Do discuss changes with your lender. Be upfront of any changes that occurred or that you're expecting to occur. Talk that over with your lender. Blips in income, assets, credits, they should all be reviewed and executed in a way that ensures your home loan can still be approved. If your job or employment status has changed recently, make sure you share that with the lender. Ultimately, it's best to fully disclose and discuss your intentions with your loan officer before doing anything financial in nature. The bottom line is, you want your home purchase to go as smoothly as possible. Remember, before you make any large purchases, move money around, make any major life changes, be sure to consult your lender, someone who's qualified to explain how your financial decisions may impact your home loan.